All right, let's go. Happy Monday, everybody. Good to be with you. Monday, May the 6th. We're almost, man, May is like almost halfway through the year. What? Come on, let's go, man. If you guys are not crushing it this year, I don't know what's wrong with you. 2024 is the year for everybody, is what I want to say here. I'm glad to be with you tonight. Glad to be sharing with you tonight. Those of you chiming in from social media, from YouTube, and those of you from the Truck Profit Academy, and those of you from MPTA, welcome, welcome, welcome. Let's get into it, guys. We're going to get right into our conversation tonight. And if you're on the line with me, just go ahead and introduce yourself in the chat. Maybe I'll get back to you just to acknowledge you while you're here on the call. That's the benefit of being here on the call, on the Zoom call with me tonight. Tonight is really be acknowledged and being inside of the conversation and really have feedback. Like you have questions and everything, and we can give you some feedback while you're here live on the Zoom call. All right, guys, here it is. This is me, Cheston Bulgin, Senior Consultant, CFO, Tax Strategist, your accounting superhero at By the Books Consulting. This is how you reach us, 888-4BTB now. That's 888-428-2669. And this is the website, bythebooksconsultants.com or at youraccountingsuperhero.com. And you can reach me via email, Cheston at bythebooksconsulting, bythebooksconsultants.com. As you know, we do the tax, we do the accounting, we do some bookkeeping, but more so than that, we are your leverage point to ensure that you are profitable, and that when you're profitable, you get to keep the money that you make in your business, especially in your trucking company. We specialize in working with people like you. If you're in this conversation, this is a dedicated conversation to those who are in the trucking industry. And this is how we serve. We serve in these areas to make sure that you are profitable, that you get to keep the hard-earned money that you go out here and make so that you can achieve freedom, wealth, and legacy. There's another thing that we talk about inside of our office. It's called peace, ease, and clarity. Just that certainty, knowing that things are going to work out for you the way that you want them to work out, because you have these things in place, is what I want to say. Now, guess what? Man, we have this group here, Truck Profit Academy. Man, we're moving forward with life, and we're growing in membership daily and weekly. We're growing in membership, and we're looking to make sure that you have access to what I just talked about, which is profitability and success in your trucking company, and to have that with velocity. Like you don't have to wait. You don't have to sit here and figure things out. We can go at the thing, like really go to work at one specific thing that will make the most difference in your business, and you can have that next level result in your trucking company. Now, usually what we found is that by looking at operations and looking at the numbers, we'll find these areas. We'll find the areas in which you're not really putting in the effectiveness inside of your business, whether that's going to be in fleet operations. Maybe you're spending too much money in one area. Maybe you're not producing enough loads in an area. You're not taking advantage of opportunity costs. Maybe you're paying too much in taxes. There's going to be one area or more that we will identify, and you can go to work on that. So just keep in the conversation. Stay here with me in the conversation. Be a part of this group. We're always talking about the ways that you can increase your profitability, make more, keep more. That's what I want to say. Quick disclaimer before we get started. Following is for educational purposes only and is not to be considered financial, accounting, or legal advice. Please consult your tax, accounting, and/or legal professional for specific advice. All right, so this conversation, guys, you ever experience your financial statements? You go and you look at your profit and loss. You look at your financial statements. You say, man, it says I made some money, but where is it? My statements say I made some money, but where did all that money go? Right? I want to talk about why profits and cash flow aren't the same. Now, this is a really great conversation to be inside of, because I see it, man. I see the confusion. Like, I don't see it when people come in and they say, well, I want to, I'm spending this money over here, but why am I not able to deduct this from my business? And they're talking about something like a loan payment, right? Why can't I deduct a loan payment from my business? Well, it's borrowed funds, right? So it's not really money that is impacting you profitability wise. We're going to talk about all these things inside of our conversation tonight, but these are things that don't impact you profitability wise, don't impact your bottom line, but they do impact how much money you get to keep inside of your bank accounts in terms of inflows and outflows, all right? So profits really come down to income and expenses. Cash flow is inflows and outflows. Now, there is a distinction. It may not seem like it. It makes, hey, this might seem like the same thing that I'm talking about here, but they're not really the same thing. All right. We want to know what is actually income, what exactly is our expenses, and then what inflows and what outflows. Now, they could coincide. All right. They could be like somewhat the same. But we want to understand, well, what constitutes something that impacts me profit wise, right, versus impacts me just cash flow wise. All right. So we're going to talk about those things. We're going to look at a few examples of that, and we're going to really get clarity on this, guys. The goal, the intention of this call is to make sure that you're empowered. Empowered so that you go out here and you understand how to be a tactician when it comes to mastering cash flow and profits in your company. You know exactly like what the bottom line means for you, and you know exactly how to maneuver the inflows and outflows of your business so that you always have a sustainability in cash flow. But not only that, you grow cash balances month after month after month after month by design. That's the intention. Now, if you're down for that, if you're in this conversation, you're down for that, just put a 1 in the comments if you're down to make sure you're increasing your profits month after month and your cash balances month after month after month. If you're in this conversation, you want that for your business, put a 1 in the chat. There you go. Yeah, we got a few OGs on the call. Man, let me acknowledge some OGs on the call. Charlene Johnson, you've been in the conversation with me before. Welcome, welcome. I see Ron on the call. He popped on the call. You didn't put anything in the chat yet, but welcome, welcome. I see you, Ron. Now you did. You just put something in the chat. There's the beautiful and the talented and the intelligent Jennifer Carol Bolgen. She's on the call too. Welcome, welcome, welcome. All right. Yeah. So Jen just put in the chat, hey, don't put anything in the chat if you're driving. Don't crash now. All right, don't crash. All right, guys. So let's see something. Let's look at some things. All right, we're gonna get some fundamentals. Okay. Let me know if you can see my screen, guys. Just give me a thumbs up or something if you can see my screen. Now, basics, all right? We're talking about cash flow. All right, I want to start with cash flow because this is really important for us to understand the nuances of this aspect of your business. Cash flows are inflows and outflows, whatever they may be. Might not necessarily be income, might not be expenses, but there's money that moves in and out of your business. It is the lifeblood of your business. Okay, now if you are a business owner and you never really understood like these components of cash flow, I invite you to consider that these are critical, these are important, these are crucial to your business. You want to know these things because without knowing them, you're not going to be able to make the best decisions inside of your business. And by knowing them, you will be able to make the best decisions in your business. Okay. All right. So there are three components to cash flow. Three components to cash flow. Cash flow from operating activities, cash flow from investing activities, and cash flow from financing activities. Now, by show of putting a number 2 in the chat, who has understood, who knew this beforehand? Who knew that these were the three components of cash flow in this conversation? So if you're in this Zoom call, put a 2 in the chat if you realize that there are these three components were the three components of cash flow. If you did not, then put a 3 in the chat. All right, so either put a 2 or 3. 2 means that you knew this was the case. 3 means that you didn't know this was the case. Right. And of course, if you're driving, don't risk it. Of course, Ron, I was hoping you know you've been in some conversations with me before, so you should know this. All right. Now, if you did not know this, and I have a few people in here that did not know this, right? So if you did not know this, you're going to actually have an advantage now. Yeah, professional drivers. But professional drivers, you professional business owners too, right? That's what you are, professional business owners. And as a professional business owner, we want to know like what moves our business forward, and how we move our business forward is going to be like lifeblood, which is cash flow. Now, cash flow from operating, let's talk about that. All right, this is number one, cash flow from operating. So when you go out here and you book loads, and then you pick up loads and you drive loads, no, you cannot text and drive. You cannot do that. Disclaimer, you cannot text and drive. Man, you don't put yourself on blast there, man. Where the DOT at? I know this guy's name is Stinson. Go after him. He's the one that's out there texting to drive. But look, if you all right, so cash flow from operating, all right? Cash flow from operating means that you're picking up, you're booking loads, you're picking up loads, you're dropping loads off, all right? You're fulfilling on capacity. Now get this, right? So there are things that you want to like spend money on when you pick up a load, right? So get this. When you know this, right? When you go and pick up a load, you got to pay for fuel, you got to pay for your drivers, you got to pay for tolls, permits, whatever you got to pay for when you're out there picking up a load, scales, whatever that is, you got to pay for these things, right, up front to produce the service, right? So that's an outflow and it's an expense, profit and loss, but it's also impacting cash flow because you are operating your business at that point in time. All right, so this is cash flow from operating, right? So when you're anything that's dealing with the operation of your company is like an outflow or inflow. We're talking about cash flow that's impacted by the operating activities of your business. So anything to do with you performing your services, this is what you can consider the impact from cash flow, impact of cash flow on the activities you have inside of the operating of your business. If that makes sense. So what does that look like? Well, you pay money up front to do what you need to do. Yep. Good deal. 3 financial statements. This is one of them, right? The cash flow statement. Yep. You remember that too, right? So now if we're talking about like the operating of your business, there are a few things that we want to consider. Money that you would have to dish out before you get paid, right? Or money that comes in after you've already delivered and provided the service, or money that you get before you provide the service, money that goes out during the process of the service, like operating expenses, things that go out. This is all considered cash flow from operating. Anytime money has to move out of your account to pay for something, to operate, to do the business of the company, that's cash flow from operating. It's an impact, negative impact to cash. Anytime you receive money from providing services, positive impact to cash. Anytime you take money on credit, which means that you take an invoice. This is a big deal because in the trucking industry, we deal a lot with invoices, right? And we want to manage the aspect of, well, how is it that I'm going to provide a service and invoice a service, but I don't get paid for 30 days. I don't get paid for 45 days. I don't get paid for 60 days, right? So there wants to be some type of methodology, some type of approach to understand the impact of cash flow from you operating the business. Now, a lot of the times what will happen, like people will get into business and they want to get a loan, right? To make sure that they can have ample cash on hand to run their business up front. Maybe you save money as an owner of your company and put that money into your business so that you can get started, so that you can operate the company before you get paid on invoices. Maybe you set yourself up with a factoring company to make sure that as soon as you drop the load, you'll be able to get paid either the next day or 2 days later, or in some cases, same day, right? But these are all things that we want to consider. These are all processes that we want to consider inside of cash flow from operating. Huge deal, right? So cash flow from operating is the one point of your business where the expense part of it, like the income, the profit and loss part of it, really coincide together, right? Now, let's take a look at like some real life example of cash flow from operating so that we can understand this. Let's say that you book a load and the load is going to pay, I don't know, 3,000, like for one load. Raycon, this is what the Raycon is for, 3,000. All right. So you know you're gonna. It's like, yes, I got this load. I'm gonna get paid $3,000 for this load. I agree to take it. So we're gonna move. All right. So when that happens, you know that you pay your drivers. Let's say you pay your drivers 25% of that. $750 to your driver. You know your driver has to get paid at the end of the week, right? This is operating for that load. Then you have fuel. Let's say your fuel is going to be like your fuel is going to be 500. And let's just say that you have like some maintenance that you have to pay along the way, like some tires or something like that you had to replace, you know, maintenance. Let's say you had to pay $800 for tires along the way. Or what else? Let's say you had to do like some scale. You had to scale some. You had to scale it when you left, and you had to do like maybe a rescale. So let's say it's about $20. At the end of the day, your profitability, your gross profit on this is going to be $930. At the end of the day, right? So let's talk about like how this is impacting cash flow, right? It's the same, right? Not really, right? Not really the same. It's not the same because all this, none of this counted because you didn't get paid for this yet, right? But all of that other expense, like the 2,030 that you spent or 2,070 that you spent, is all outflow, right? And this is what we want to account for, guys. This is the cash flow impact. Like you're profitable here. This is what I want you to see, that you're profitable. You're profitable $930. At the same time, your negative cash flow is really a negative $2,070. Right? Now, if we're not looking at this, like the real impact, then we will set ourselves up for catastrophe long term. Because how many of us are going out there just like booking loads, knowing that the load's going to make us money, but we're not considering how much it's impacting us cash flow wise? We have the feeling of it. We know we make choices like go ahead and get factoring to make sure we get paid next day. But how are you setting yourself up to win each and every time with this, right? Now, what are some solutions? Now, a lot of like companies, what we'll do is we'll set them up with like lines of credit to manage cash flow, right? That way we're not putting money out of our own pocket up front, and we're still meeting the obligations of paying for the loads. But at the end of the day, we're satisfying our cash needs for the business, right? And it's a risk. What if something happens? You're paying this money out, using somebody else's money, and then maybe you don't finish the load for whatever reason. Somebody has to take the load from you. You get like not the full pay of the load, and then boom, you're in a worse off position. Now you owe money to the people that you borrowed money from, and you didn't make the money, right? Plus you got to pay interest on that money that you borrowed. right? Now, it's interesting to think about, well, what, all the things that we want to put together to manage our cash flow effectively. Well, what's the best approach? What's the healthiest way to do this? All right. This is the conversation I want you to be inside of as a fleet owner, right? Just shifting this thought process to understanding the components of this is a huge deal, because now you're actually processing it like mentally, that you have to account for, well, the negative impact of cash when you're out here operating, and then the positive impact of cash, like when invoices get paid, right? Or when you can do net 30s on your suppliers and your vendors, right? Maybe you have a good relationship with somebody to on maintenance, right? Like lines of credit, or they actually have let you pay later. They credit you for services, right? And some of these other companies will do that, like your major maintenance companies, really the companies that actually sell your equipment. They'll actually give you credit for a lot of these maintenance services, like your your Volvos and your Freightliner and internationals. They'll actually give you credit accounts in some cases so that you get maintenance. That might be another strategy you can use to maintain positive cash flow, right? From operating. The other thing that we want to look at is like depreciation expenses are the last thing that I have here on cash flow from operating. And really, basically what that means is that you're not really coming out of pocket for depreciation expenses. That's actually a positive impact to cash, because you record it as an expense, but it doesn't impact you cash flow wise, right? And we're going to do another talk like another day just about how to obtain financing, like like what lenders look at for financing, so that you can make sure you're leveraging depreciation as an expense, so you're not like overstating your income, which means you're going to pay more in taxes, but have that depreciation expense as like a non-impacting expense to cash, if that makes sense. Okay. But cash flow from operating is just one of the components, right? Now, the other thing that we want to talk about outside of cash flow from operating are investing activities. This is so huge in the industry, like investing activities. So what is investing activities? Who knows what investing activities are? If you want to share what you know about investing activities, you can put it in the chat. Who knows what that is? Investing activities. It's right there. It's like, well, who knows what it is? It's like right there in like plain language. Purchasing assets and selling assets. But what does that really mean, though? Is what I want to say. What does that really mean? Right. So the trucking industry is so it's so key to understand this part of it, because this is where you can get into trouble if you don't really prepare. It makes sense. Like okay, so purchasing assets. I want to buy a truck. That's purchasing an asset. That's what that means. I want to buy a truck. I want to buy a trailer. I want to buy another piece of equipment. But why? So the intention is that this piece of equipment, this truck, this trailer, whatever it is, it's going to make me money, right? Inside the business. So whenever that happens, there's going to be a negative impact to your cash position. So why is it so critical to understand what it is? Because you want to look and see, well, when is the right time for me to invest in assets to buy another truck? I may be excited because, the one truck is profitable, is producing like income revenue, like net income. Like, you're making money off the one. He's like, man, if I just get another, I already know I have a good driver in mind. You've already looked into like somebody and they're a good driver and they want to come on board. Like, man, if I just got this other truck, I could make so much more money right now. But when would be the right time to do that? Well, it's going to be an analytical approach to making sure that when you invest in the equipment, it's not going to be as such so that it's going to take your cash position lower than what it would be for you to perform operating activities. Okay? We're always looking at this balancing act, guys. So if I'm investing in a truck, I want to make sure that it's not going to dip me down below the integrity of my operating capital for my business. So what does that look like? Well, if you buy design, some of us don't do this. right? You by design, they don't do this. Like you by design do have a like you have 4 months operating capital is where you want to be in terms of your cash position in your business, right? Now, if you're at a healthy 4 months operating capital in your business, which means you have reserves in your account that could pay 4 months of operating like overhead costs in your business without running the truck, right? Now, you would want to be in a position so that when you make that outlay on a new piece of equipment, that it won't dip you down below the integrity of that operating. Like you'll still have 4 months operating capital reserves in the bank after you've invested into the truck, right? Now, if you're doing that, if you have those systems and structures in place, you have no choice but to win in the business. And some of us are like, man, I ain't got 1 month operating in the bank. Some people are like that. I don't have 1 month operating in the bank. Well, if that's the case, it's most likely because you haven't been paying attention to these three components of cash flow. That's why, right? From operating standpoint to the investing standpoint, right? And definitely to the financing standpoint. Right. The other side of the investing, the cash flow from investing activities is when you sell off assets. All right. So that's a positive impact to cash, is what we want to say. So when we sell off any assets in the business, it actually increases the cash in the bank. All right. So there's combinations that we can use here, guys, to make sure your cash flow is running smooth. Like that lifeblood of your business is going in the direction you want it to go. Now we're going to take a look in a minute to an example of like a company that's really doing this at a high level, like really to a blueprint level, managing cash flow, so that the cash is increasing like exponentially month after month, so you can see what it looks like, right? But what I want you to get in this section is that there are combinations of strategies that you want to use here to ensure that your cash flow is up month after month, right? Yeah, you want to be profitable. Yeah, you want to make sure that each load and each job you take is going to deliver you more money in terms of profits. But really, we want to make sure that the cash balances of your business are going in the right direction. So how can you make cash flow from operating positive? How can you make cash flow from investing positive, right? And then how can you make cash flow from financing work for you as well, all right? So it's going to be a combination of these three. So to wrap that up, cash flow from investing activities simply is purchasing assets and selling off assets. So when you're purchasing equipment, think of that, okay, well, I'm deploying this cash flow strategy right now of cash flow from investing. And I realize that the impact of this is that my cash position is going to go down, but I really understand that the true impact of it is going to take me to this threshold cash-wise. And if I'm at this threshold where I want to have an operating reserve of 3 or 4 months, if it dips me below that, then you know that you've made a decision that does not go into your favor. All right. So these are the things that you want to look at when you're making all the decisions in your business. Right. How is this impacting me cash-wise, really? What I want to shift us to in this conversation is to make decisions based off of just pure data. Because sometimes we'll get like caught up in the emotion of it. It's like, I really want to do this. I really need to do this. And a lot of times it's not really a need, it's just a feeling of the need. And then if we pull back and take a look at the decisions that we made already, because the true choice that we've made is to have the business be very successful. That's the choice that we get to make over and over again, is to have wins inside a business day in, day out in every decision that you make. Now, as a result of that, all the other subsequent decisions want to be in line with that, if that makes sense. Right. So what I mean is, okay, well, you have a threshold that you want to keep of 3 months reserves or 4 months reserves in the bank for operating. If you're going to go out and buy a piece of equipment and it's going to take you below that, you might want to hold off, right, with integrity and build up the cash reserves more so. Then make that decision so that you move into it healthy, right? And then that wants to, that pattern wants to persist. So you want to make sure that when you add units to the fleet, it scales up, then you still have the same level of integrity in terms of the reserve, because you'll need more reserves for operating another unit on the fleet. Okay? So those are the things that you want to take into account. Those are the things you want to consider when you're talking about cash flow from investing activities. The last thing that we have here is cash flow from financing activities. Financing is cool, right? So financing, most of us think about financing in terms of like loans, right? Which is financing. We get loans from banks, from lenders. from private individuals. We can get loans, right? But that's not the only component of financing. Financing is also like equity, like how much you have in it yourself as an owner, or if you're multiple owners as a shareholder, how much equity is in that company, right? Now, equity is cool because now we're talking about like profits and cash flow, and they're not the same thing, but they impact each other. So if I'm looking at equity for my business, there are two things I can look at, right? There's money that I've personally put into my business, like I've saved money, I put it into my business, or I've gone out and taken on more shareholders and investors, and they've invested in the business as well, and that increases the equity of the business, right? In terms of the cash that they contribute to the business, it increases their equity. Or it can be as simple as profits, like profits that the company has made from the last month or from the last year that get rolled back into the business. That's also equity, okay? Now, if we understand like this, like that's an equity, by the way, is also financing, right? So if we understand the dynamics of that, like the idea is for the company to be self-financing. Like a healthy company can be self-financing, which means that it has profits that it gets to keep, so that anything that it wants to obtain in the future, it has sufficient resources to do that if it so chooses to do that. Okay, it doesn't have to, but it's sufficient. All right, so that indicates a healthy financial statement, is what I want to say. So if you have more equity in the company, which means profits in the business or investors that have invested in the business, man, it goes a long way. But you can also do financing by loans, a combination thereof. So what does that look like? Well, let's talk about how this works in combination before we move on to the real life example of this, right? Now, you made money, let's say you made money in your trucking company. You made $100,000 last month in the trucking company. So that's the equity that goes into this month. Like, so $100,000 net profit in April. And then, so now at the beginning of May, that's equity that's in the business. Then let's take a loan to get another piece of equipment so we can increase the amount that we're able to make. Makes sense. We have this decent amount of profit for the last month, and I don't want to necessarily use all that money to buy the equipment. Maybe I can use some financing to do that, right? Get a loan, right? And that's what many companies will do, right? And you want to be in that position to be able to, balance the equity of the company and the financing opportunities of the company. So you put maybe you put $20,000 down into the new piece of equipment that you're purchasing. Equipment costs $80,000, and you just get a $60,000 loan, right? Your cash position didn't take much of a hit, right? It just took a $20,000 hit, and then the rest of it was financing, right? So that's how we leverage that, guys, and that's how these interplay with each other inside of cash flow, all right? Now, hopefully this is making sense, guys. It's going to make a little bit more sense when we look at reports. Hopefully make a little bit more sense when we look at reports. But if you have any questions, if you have anything that you want to bring to the surface in this conversation, even real life examples that you want to go over, you can put it in the chat and we'll talk about it. All right. If you're watching on YouTube, same thing. If you're in the community, same thing. If you're in the Truck Profit Academy, same thing. Put it in chat. We'll go over these things. All right. So let's take a look at something else. Okay. Real life example. So this is one of the trucking companies that we work with, right? And this is last year, okay? And this is a profit and loss statement, right? Right down here, you can see this is profit and loss that we're looking at, right? So you can see, they brought in like almost 12.5 million total revenue, right? And they operated pretty efficiently inside of what they were doing because they were able to get like a gross profit margin of almost 70%. They got to keep after they paid the drivers and everything else. And then bottom line, after everything was paid out, their net income, 3.7, all right, that they got to keep, profit-wise. Not necessarily cash flow-wise, though, right? There's some other things that are going on. So you got gross revenue, right? Gross revenue. Then we have your gross profit. Then we have your operating expenses. Then you have your net operating income, which is almost 5 million. And then they took into account depreciation, which made it like 3.7. Okay. Now, this is a cash flow statement, right? Now, at the end of the period, look at this, right? They had this much cash at the beginning of the period, which is 440,000. At the end of the period, they increased their cash to almost 1.5 million in cash. But you can see right now, they don't equal up, right? The net income does not equal the increase in cash. But why? Why? Because all these other things that impact cash flow, we talked about them, all right? So we have all three of those components here, and we can take a look at how this actually impacts. All right, so we have a cash flow from operating, all right? So this was a net income. This is really what was the end of the day. They made this much money, right? But how much was it able to translate into cash that they were able to increase period over period, right? Well, a lot of that was taken out because it wasn't paid yet. This company doesn't use factoring, right? So all of the invoices, they're outstanding at that point. So these are uncollected invoices, right? So that's a negative impact on cash flow from operating. Now we're seeing it in real life, okay? That's what that looks like. All right, a negative impact to cash because we took invoices and then people haven't paid yet, right? 1.9, nearly half, like a little bit more than half really, of the actual net income was not paid out yet. All right, so that's negative impact. All right, then cash advances they've been giving out, right? So you see all this negative cash advances to drivers, right? And then we have like some short-term loans from their employees. So like all these things, guys, look at this, man. All these things, they really have like an impact on the cash position. Now, if you are operating your company and you are not really looking at, the impacts behind the decisions and the choices that you make when it comes to cash flow, then most likely you're hurting yourself as a business owner. Right? Most likely you're hurting yourself as a business owner. Now, some of us in the conversation may be like, well, is it really that important for me to check and look at these things all the time? You don't have to look at them all the time, but you definitely want to have an idea and understanding of the impact. Right? When you're looking at reports like these periodically, let's say you're looking at them weekly or looking at them monthly, well, you understand, what choices you've made and the impacts of the choices that you made. Right? Now, giving drivers advances, they can get away with it because they still have positive impact to cash flow at the end of the day. They can do that. But can you? That's the question. Can you do that? Right? And if you're pressed by the people who drive for you, if you're pressed by employees to do this, well, don't be. Be very clear. Like if you're clear because you can look at the information here and see that it doesn't serve. It won't serve your business. It won't serve you. It won't serve them, really, to do that. Because at the end of the day, the health of the business is paramount. It is the priority. Right? The health and sustainability of the business is the most important factor. Right? So this will help you make those decisions. Those will make you these choices that will ensure that you remain like healthy when it comes to cash flow. All right. Now, look at all this, man. This is all this depreciation they get back too. And this is what with the impact of depreciation. They got to write this off, depreciation-wise, but it comes back to operating because it's not really impacting cash at all, right? So they got all this back in depreciation for all the equipment that they have on the fleet. Okay. All right, and then they have this is impact of credit cards, like negative. So paying down credit cards and having credit cards pay for things, right? And then they have this, like, they didn't pay their employees yet, so this is like direct deposit payables, like wages payable. Like all these have an impact. Like I get to keep cash when I'm not paying, like I don't have to pay my employees right now, even though the payrolls do, it's something I haven't paid yet, right? It's something that's a future payment, right? In this case, they didn't have to pay payroll until the next year for what the employees had already done and that they had already performed, right? So it's a positive impact. Right. The same thing with their payroll taxes. This is money that they did not pay out yet. It's money that impacted their profit and loss. Yes, because they incurred the expense, but they didn't have to pay for it yet. All right. So get this, from operating, their income was impacted negatively, $634,000. Right? That's negative impact for operating. All right. So ideally, we want to have positive impact from each one of these areas. And if we don't have the positive impact, the next question is how can we have the positive impact next period, the next cycle? What are the things that we're going to take into account? Now, if I were this company and I was looking at this, I would say, okay, well, the major impact here is number one, we have invoices and the time to collect on invoices. Well, how can we reduce the turnover? That's the number one thing that I'd be going to work on is accounts receivable turnover. You got people that are paying like maybe later on their invoices, and I would provide maybe slight incentives for that, like maybe 1 or 2% discount on quick pays for invoices, and that could be a thing. That way, the cash will get up from operating activity. But to be straight, guys, these guys, they're not suffering from this. They can wait on the money to come in because they've done such a good job in these other areas. Like especially like increasing the profits, they've increased profitability, yes, but they've done so much of a good job with the increased profitability in these other areas through the investing activities and through the financing activities that they can wait. They don't have to really go to work on that one area to improve it, is what I want to say. All right, now let's talk about the investing activities. You see all this negative here. These are all paybacks on loans right now. So up front, it's good when you get a loan, all right? So there's a positive injection of cash from getting a loan. But then, depending on the term of the loan, it's going to be a huge negative drain on cash over time because of that loan, right? Depending on how long that loan is. So these are the things that we want to consider. Now look at this, right? This is a lot of negative impact from paying back loans. Now, guys, paying back these loans, it does not impact the profit of the business, right? This is not impacting the profitability of the business. This is not an expense. This is just paying down balances. That's all that is. That's why profits and cash flow aren't the same. All right, now, they've done a great job of making like almost like $4 million in that income. And a lot of that is going back into paying back loans, right? And I'm sorry, this is investing activities. My bad, guys. They've invested in a lot of new equipment is what I want to say. That's what all this is. They bought a lot of new equipment, all right? Now, the financing activity is another story. Same deal, right? But you see they took on loans, right? They took on loans this year. They improved their cash position. I mean, they did a lot of heavy investing. That's what I want to say. 3.5 million. I'm just getting present to that right now, guys. This is actually going to impact them very positively, is what I want to say. Over time, right? If that they have these assets and they're utilizing them, this is going to take them to, like it might even double the revenue, at least because of the investing activity that they've done. All right, now we're taking a look at the loans here. This is the negative impact of loans, but then we have the positive impacts of loans, right? Now they bought some equipment, so they took out a $650,000 loan, they took out a $100,000 loan, they took out another $140,000 loan, took out a $420,000 loan, $500,000. This is a lot of this was a lot of financing to support the growth of the company, right? Now I will say this: we were just talking about this a little while ago, and guys. I'm going to wrap up this call in the next few seconds. We were talking about this a little while ago in terms of, I want to buy new equipment, but how is it going to impact me really, right? I would say that they're a little bit off here in terms of the amount of financing that they took on and the amount of investing they did at once, right? I was saying a little while ago that it's going to impact them positively in the future. It could, but up front, they'd have to be able to sustain all of the outflow for these loans. We're going to see that we're actually going to be seeing the impact of this over the next couple of years, and how they're able to bounce back and ease back off the financing and investing activity and just really focus on like driving those profits up. That's what's going to make sure the cash flow is improved for the next 2 to 3 years, really. So I'm actually interested in seeing how they're going to perform over the next couple of years, right? With that being said, guys, I just want to wrap this up, guys. Fantastic call, fantastic conversation to be inside of. Now, we want to understand how we're going to use this for ourselves, right? You want to be inside of the cash flow side of your business to understand the impact of you making decisions, right? Decisions when it comes to, operating, like even inside of factoring and everything that it takes to operate your company cash flow wise. Decisions when it comes to really investing in equipment, because that's one of those major decisions that really wants to be understood before you make an outlay investment wise. Taking on loans, the long-term impacts and ramifications it has on cash position, right? We want to understand those. And at the end of the day, you want to make sure that just like this, I mean, they won here. They won because their cash position went up significantly from all the activity that they took on in that period of time. All right, guys. It's been a great call, great being with you. If you have any questions, comments, definitely put them inside of the chat, inside of our group. Put them inside of our YouTube channel if you're on YouTube. All right, give us a like, give us a thumbs up on YouTube if you're there. All right, we have a workshop coming up for the Truck Profit Academy coming up on May 11th, 1 p.m. We're talking about how to set goals in your trucking company, how to actually set goals in your trucking company so that you maintain that high level of profitability, that you go out here, you focus, that you're able to get what you want in the industry, in your business. What does that look like to really set powerful goals in the industry and in your company? All right. So we're going to talk about that. We're going to dedicate 90 minutes to that conversation. Really, it's probably the most powerful conversation you can be inside of because we really understand what it looks like to live by intention over here. So intention is everything, and it's another word that we use for goals, but it's more so than just a goal. All right. You want to really be clear on what it is you're looking to accomplish. And once that gets etched in stone, there is nothing else. Right. So we're going to talk about how to deliver that for yourself, for your business on May 11th, 1 p.m. Eastern Time. Make sure you sign up for our group, the Truck Profit Academy. You can go to truckprofitacademy.com and register for the group as well. All right. But we'll see you then. See you next week. It's been great being with you guys. Take care. Have a great night. Great being with the people. Bye-bye.